All right, I keep telling you, we're in the middle of earnings season right now. A lot of companies come out with earnings. We like to give you the big ones that matter, we think are barometers for where we're going as a country. IBM among them, out with numbers that appear to be a tad better than expected at $1.70 a share versus estimates of $1.66. Revenues were down about 11.5%. That was largely expected. In fact, the revenue decline was a little less than expected at around $21.7 billion. IBM is a very big company, keep in mind, so these are gargantuan figures. But nevertheless, IBM could be kicking off some better than expected technology news. We're going to see more of that later in the week with the likes of Apple and Oracle that itself made a bid for Sun Microsystems. These are closely watched numbers. So far, the early read is positive, but we'll see. Meanwhile, stressed out and now, well, just stressed. The bank CEO was so sick of all the strings attached to the federal rescue dough that this guy decided that he wanted to be free and clear of that dough, and now he is, after paying back more than $15 million. Joining me on the phone, Central Bank of West Virginia founder and CEO Douglas Leach. Mr. Leach, no pun intended, but you really didn't want to be seen leeching off Uncle Sam. Why not?
Yep, that's right. We're not freeloaders. We make our own way here in West Virginia. Really, I should be spending my time right now making loans and garnering deposits, not dealing with government regulations and programs, and that's really the number one reason why we exited the program. You need to know that Centra is one of the strongest banks in the country. Its capital levels are nearly double the thresholds of a well-capitalized institution, the highest category achievement a bank can see.
So why did you take the money in the first place?
We took the money in a spirit of good faith and as a matter of duty. You need to know that Centra made $475 million. That's nearly $500 million of loans in 2008. Lending was strong here. We're the number one lender in each of the four markets that we operate in. But there was no shortage of capital. What we did it for was, as I said, in a spirit of cooperation to actually increase further the lending that we've got.
But nevertheless, you paid it back very, very early. In fact, a lot earlier than even the government wanted you to. And it comes on the same day some big banks, led by Bank of America, have indicated their lending has actually gone down. Now, you said there's a reason for that, that actually it is prohibitive for banks who get this money to lend it back, right? Because the cost of keeping the federal money isn't 0% at all, is it?
Well, there were a number of prohibitions. One, a stated intent of the program under the Bush administration was that it could and should be used for acquisitions of healthy institutions. That's a major part of our strategy in growing the bank. The restrictions that were coming to us by way of prohibitions against foreclosures that certainly would not be in the interest of our shareholders, the modifications to loan documents. That's like a mother and a father coming into the bank depositing $20,000 in a CD, and we make a loan to their daughter or son. The government could come in and tell us to drop that loan rate for whatever reason they choose, but I don't get the opportunity to correspondingly drop the deposit rate. You can see what could happen to our interest margins that way.
All right, well, if you're right, real quickly, Mr. Leach, it means that all this money we've been giving to banks thinking that they'll be more encouraged to lend, sounds to me like what the opposite could happen, right?
Well, the effect of this has been, on March 31st, we returned the $15 million. In a separate transaction a week later, we sent back the $750. That's $1 per share for the preferred Class B warrants. 2 days later, Treasury sent that money back to us by way of a wire with a letter to me saying that the path through clearing these TARP restrictions is to pay the $750,000.
Right.
In reality, it was a penalty for early withdrawal from the program, and Centra has been impacted to the tune of about $750,000. For us, that amounts to 32 small business loans totaling $7,500,000 as we leverage our capital at a ratio of 10.
All right. You're actually choking me up there. Mr. Leach, thank you very, very much.
Thank you for having me.
All right, well, you can't get a loan? Well, join the club. Only 3 of 19 bailed out banks increasing loans in February. The Wall Street Journal reporting that lending overall dipped by 23%. Even folks with good credit are having trouble. With us now, real estate expert Dani Babb. It is a real problem, isn't it?
It's a real problem. We have a bunch of new rules being put into place. My team has called 19 lenders in the last 2 weeks, and we have found that 18 of them...
It's called 19 lenders in the last 2 weeks?
We've called 19 lenders in the last 2 weeks.
Oh, I thought that was the name of it.
Yeah, no, we've called 19. And 18 of them refused to do do jumbos. I talked with a gentleman from Wells Fargo
Jumbo
this
loans,
morning.
larger
Jumbo
size
loans,
loans.
anything over 240 in most of the country or 747 on the two coasts. I talked to Wells Fargo this morning, and they said that if you have private mortgage insurance on your note, anybody that didn't have an 80% loan to value is going to have private mortgage insurance if they didn't take out a home equity line. Those people are not refinanceable under FHA rules. We know that anybody with a neg am mortgage, this is if you're with Wachovia, it's called pick-a-pay. If you're with Washington Mutual,
negative amortization means you owe more than the house or the mortgage is, right?
You could have been paying your interest the whole time, but even if you have one on your credit,
you're a scarlet letter.
You're out of there for potential risk later on. And then also the new status FICO is 760 for many refinances, even in the FHA.
That's the number you got to have on your credit report. You're an encyclopedia with this, so you got to slow down. No one knows what the heck you're talking about. All right, so let me ask you this.
Yes.
You're saying that if we don't change things on the jumbo front, we're going to have a jumbo problem. And right now, the jumbo reality is people are having a tough time getting money.
They are, and it's not the jumbo market's the future problem. I think this year and next year we're going to see a big problem there as these loans begin to reset. But even people in the conventional markets right now, based on their loan type, if Fannie and Freddie didn't buy it before, the banks don't want to lend to you now, which is a really big problem for people that are trying to just do a straight refinance and not a modification.
All right, so all these people trying to take advantage of low interest mortgage rates, they kind of can't, right? Because the restrictions are such that unless they put more money down, they're screwed.
They are. They're basically screwed. They have to have 12 months reserves in the banks. 12 months times your monthly payment. That's a lot of money for people to be having in cash right now. There are so many restrictions coming down the pipe. I was told today by Chase the programs are literally changing on a daily basis. So if you can't find a loan today, you may be able to find one tomorrow, but the lenders can't even keep track of what the options are.
Well, you know, this banker we had on, that's onerous for the banks too, because essentially they're borrowing from the government, not at zero, but at what could be almost Tony Sopranian rates. I mean, where they have to, pay back eventually at double percentage returns. So then you got to gauge the interest you have in making a loan in the first place. A lot of them are choosing not to,
or give the money back and try and borrow at zero and
that's right. That's right.
Sell it instead. But if the government,
so if you're right for housing, this means what?
This means we're going to have a slower than expected or than wished for spring buying season, which is not good. We know that applications are up twofold. How many people are getting loans? About 30% less than last year. That says a lot, especially.
So what percentage of those people are getting loans?
What percentage of
the people who are interested in refinancing or getting original loans?
In the conventional markets, about 28%. In the jumbo markets, less than 10.
Wow. So 1 out of 4 stand a chance of getting a mortgage at all.
The best thing to do is to first try to modify. Yeah.
Man, oh man. All right, well, Dani, and on that upbeat note, Dani Babb, she knows of what she speaks. All right, when we come back, we all know he shook this guy's hand. What about this guy's hand? After all, the guy on the right has been a friend for a long time. The guy on the left, well, we don't know.